learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in at April 14th, 2020, and this is the next wave of the stock market cycle relative to how the economy has been responding. We have a lot to talk about. I want to go over some of the news that came out after hours, what happened today, both with policy down to even psychology, really, and some of the theories that we had and how things have played out. Then I got the keys for you guys, got the plays. I want to go over three different plays, three plays that I liked. The Netflix from yesterday, those hit. I took a different set of plays, but I want to go over that and what we're preparing for with earnings, and then overall just even some strategy that we need to watch for. But a lot happened today. The market didn't really do much. We closed down 320 points. However, we did see the first wave of earnings, and that's what we're talking about with the cycles here. Even this next cycle, pretty much, I'll just give it away to you right now, has to do with the virus and what we saw today. But the fact that we're kind of now in the third week of more or less a recovery mode, or at least just not completely dying, that's important. You're seeing the cases go down. I mean, the first wave, really, I think it is complete. And this is now everything from the economy to society. I think everybody is looking ahead now, and we're going to see what the second wave brings in and just how things are going to get going here. And now, in its own way, this is going to be the weird moment of truth. So that with earnings, I just hope you guys are ready. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. All we ask is that you're positive and respectful. All the plays are live. You could chat, ask a question, anything. The world is yours. Just be positive and respectful. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes? Did you get the Netflix? Are you going to play the Netflix? What are you playing for earnings? What do you think about oil? What do you think about the waves? Is this the wave? What wave do you think we waving on? We want your input. We need to hear it, baby. And God bless all of you, and thank you all for being positive and even watching this video. I love you. Okay, I had to change these charts around, but let's get right into it. So, right off the bat, the first key that we're talking about is the wave. I think this first wave is over, really. And I mean that with everything going on with the virus and the economic effect, too. You're even seeing some of the governors now against the president's orders. They're looking to restart the economy. I said it yesterday. I don't know if you guys picture outside. I even went outside today. I actually got a test to see if I had the antibodies, actually right before filming this. And it seems like there's just more people outside. More people are getting back to work. Again, now even some of the stimulus checks hit, and that was the news that came after hours. They still gave updates on drug approval. They said they're expecting now the checks to really hit everybody by Wednesday. And Trump even said it looks like, they could have saved more lives, but it's looking like they've already that there was some effect. They pretty much everyone's been clapping this last few days, and that's what we're seeing, and it really does look like this first wave is over. Now, the key is the expectations for the second wave. How is the second wave going to be? Are we going to go to a full economic shutdown, or once again, even I just took the test, that's very special, because if these tests become widely available, they increase the testing, you could pretty much get tested. If you find out that you have it or not, you don't have to really worry as much now anymore, or if you have some level of antibodies or immunity. Now, again, I'm not a scientist. This isn't accurate. Hopefully, you understand what I'm saying here from just how we're viewing this with the stock market, because now, if the technology comes or whatever the reason is, people become herd immunity, anything. There's a wide range of possibilities, but the key is now, as we come into the second wave, you're not going to react like you did in the first wave, and that's what we need to watch out for, is we need to see now what that's going to be with what businesses will stay open and who's really going to be the winners and losers, and that's the next thing I'm looking forward here. Again, besides earnings, we really need to talk about earnings, but think now coming into the second wave, this is going to take time. Time is going to be of the essence. But watch the drug companies now, the winners and losers from that first fiasco of all the drug stocks popping off the viruses, vaccine, therapeutics, all that. Then look for the winners and losers. Who won last time? Walmart was a clear winner. Zoom was another clear winner. Who was a clear loser? The airlines, Expedia, all those companies. So this is what I'm saying, is pay attention to these winners and losers, because you're either going to see a new class go from winners to losers, or losers go to winners, or you're going to kind of see the same performance. So watching these companies and how they develop here coming into the second wave, this is going to be that moment of truth. So I'm very excited for that. But pay attention, again, from the societal shift that you're kind of seeing all the way down to people saying that things have worked. This is going to pretty much, welcome to step two. This is now, it seems like we're definitely moving. This is an inflection point. You're seeing now stimulus hit. This is all kind of a bigger part of the change, or at least very different than the situation we were looking at 30 days ago. We actually see numbers kind of stalling out a little bit. We've kind of seen it go everywhere, so there's not as much unknown to it now. Now you actually know checks are on the way, checks are hitting. People are already kind of know what's going to happen with rent. So it's a very unique but different situation than 30 days ago. So you could kind of see this with asset prices and everything going on. So that's the first part. The next wave, or the next cycle that we entered today, because even though we ended up down on the overall market, the big part to look at still had some very, very big winners. And that is something you saw with like Netflix. We called out Netflix, and they started running up today. They killed it. They were up like 7%. Amazon did good. And really, you're seeing that first wave hit now, where you're seeing some of these leaders and then coming into earnings. Yeah, they don't have to do bad, but this is how it works with earnings. Sometimes the companies that do a little good, if they have earnings coming up, a reason for a small move will make them have a big move. Or if the market doesn't go down, or if the market goes down a little bit, they won't move as much. So we saw them kind of kick into gear. This is what I was expecting for. Even on the weekly Netflixes, those all went up 1,000% today, even from the morning. So we missed out on that. We talked about it. However, watch the premiums because now we still don't know about this earnings. We still don't know who's going to be a winner or loser. We don't know based on the expectations. And the fact is, stocks have moved so much. This could be Iron Condor season, and we're going to talk about that, and I want to even look for some Condor plays. I just do not want to force it. I have a specific ratio I want, and we talked about it on stream. We'll talk about it again here, but that is going to be important. However, looking at the premium so far, JP Morgan was a good example. I'll show you guys right here, but I could already tell it's going to be musical chairs, and it's not going to be easy. I having this feeling that it's just not going to get any better from here as far as, we're going to get crazy. I think there is going to be good opportunities, but I think we're going to have to work a little bit harder. It's not going to be as easy as just buying puts a few weeks ago. They got to stop that. So let me show you what I'm talking about. This was with JP Morgan. Now let's go back. I posted that video on the weekend. You guys should check it out. But this was the play. We turned $60 into $1,000. This was 1,500%. We bought it last Tuesday at 12 cents, shot up to $2. You guys should remember that play if you've been watching. But now today, remember, we sold out. We sold out 4 out of 5, so we got to realize a lot of the profits, so we're still holding it. But now that one contract is worth $55. Now I said today I was going to buy another play on JP Morgan on the put side to get us that earnings strangle. And the best part was we got to buy the call while it was cheap. We got to run the whole call up, and then that theoretically put should have got cheaper, so then we could have got a better strangle. But now this is why I'm saying it's going to get difficult, because imagine this. This play was $12 a few days ago, had the earnings run up. It went up 1,500%, but now it's still up. It's still up 500% from where we bought it, so it's still a good gain. But then depending on if you paid too much for it in the earnings hype, you got killed and you got crushed off of that earnings premium. So that's the logic, but what I'm saying is now factor this in. Again, they haven't reported yet. Picture what happened with Netflix today. Netflix had the run-up. Then now, again, if they report in 2 weeks from now, it's going to give time for this chart to play out. But notice how value went cheap to expensive to still expensive, but definitely not as cheap. But now look at the put. So I grabbed this 88 put. Here's one of the plays for you. But this is what I'm saying. Look, since last Tuesday, that same play was going for $380. So even then, as the stock started ripping, at this point, our play was up 1,500%. This option dropped down to $1 from $3, and then now today is at 60 cents. So even though today the stock got killed and it killed the calls, you guys saw what happened. Even the last 2 days, these last 2 days just murdered our calls. But what happened? The puts didn't go up in value. So these were the same price. So that was good for us. But now, if we played this at a different time, you would have been in an interesting position. And then what could have made this even harder is that if the puts went up now, then your puts would have been at a premium. The calls would have still at a premium. You could see how there's an opportunity to lose on both sides. So that being said, earnings season is kicking off. I'm seeing it in the premiums. You're seeing what happened with Netflix and some of these other companies. You're going to get some big moves. However, it's not looking as easy. So you got to be diligent. I think you're going to get rewarded if you go quick. You're going to get rewarded if you control your budget. You'll definitely get rewarded if you give yourself wiggle room too. That's the thing. I think scaling in, going in small. So some of these plays, even the UNH, I went small. I did want to do an earnings flip, but I went small. I was like, I should have gone bigger, but looking back, going small and staying nimble, because now, like, if you play JPM, we thankfully took a lot of profits. We didn't have to risk it. So now we're a lot more nimble. We were able to get the puts for cheaper. We could get the calls for cheaper, or we could maybe find a different one. But playing small could open up some doors. So just keep that in mind. I think it's very, very important. I think what that showed us today, and then we'll see what happens with JP Morgan tomorrow morning. Well, we're going to figure out how everything is, or that's just a glimpse too. Because again, the finance stocks, and you're going to get some of the more value stocks, J&J, Coca-Cola, those are going to tell us a little bit, but nothing will quite tell us after we see Netflix earnings. That will start setting up everything. Everything. Sorry, I'm really excited about earnings, but pretty much get ready for things to slow down in a weird way. And that's what I'm saying, because now the market's looking at this next wave. We're looking at coming into the second wave, how we're supposed to prepare, analyze, and do all of this stuff. But then now you got this next wave of earnings. These companies are going to report. There's a lot of stuff we need to wait for. So get ready for it to slow down in a weird way. I think the markets could still move as fast. And what I mean slow down in a weird way is that big moves could still happen, but it's not going to be reacting to the same news you really expected. And that's what I want to look for. If that happens, I'm going to be very interested in it, but that'll pretty much tell me that, hey, you know, this whole slowdown plan will be good. But if the market starts moving fast and moves fast with news, we'll see. But if we start to see a melt up type of, slow down but big moves, that will tell us something, or even a meltdown. And then finally today, oil didn't do good. And this was crazy. So even though OPEC had that confirmation yesterday, oil did not do good today. And that was very interesting because one, it's going to tell us about the markets. Oil could be the second wave. So maybe, well, who knows? What if oil does break $15 or $10, or if that situation with demand doesn't get better, or that has an externality or spillover effect and oil affects this and that. Some of you guys were talking about the Naira today. It didn't go too crazy. That is the Nigerian currency. And again, don't forget what we were looking at with currencies, and even you see where gold is at. But oil and all those commodities and all that could be pointing towards the second wave. However, give oil a few days. We had the oil confirmation with OPEC. They cut. We see the first day. Give it probably by the end of the week. By the end of the week where oil is, that will give us an idea of, okay, let's start to see what's in the cards for oil and what this means about the economy, the second wave, everything else, and then even the health of some of these individual oil companies. So that's pretty much it. So let us get into the plays. So right off the bat, I made 2 different plays today. 3 actually. We went over the JP, and I bought the JP Morgan play just to hedge it and again, do the earnings straddle, and that is the earnings criteria. So if you haven't watched my video, go search it on YouTube. It's how I turned 160 into 1600 trading Tesla. We go over standard deviations and the earnings criteria. I feel like as we get into earnings, I'm probably going to go over this again for a lot of you, but if you want that head start by watching that video now. If you see what I did with JP, this is what I've done with every earnings. Essentially, we're playing the volatility. We're playing the option prices. It's not about, do I think the stock is going to go here? Sometimes I do. Some specific companies, I will have an idea and I will weight the trade more to the upside or downside. But in some of these cases, you don't know. So we took advantage of the calls on JP Morgan last week. Those went up 1,500%. Took profits. We still have a play. I still want to play earnings. So what I did today now, I bought a put, and that was the one I showed you, the 88 for this week. So that was the first play. The next play I got was UNH. So now this is what we talked about yesterday, and I'm mad because I went for the UNHs this morning, but then I ended up getting those, and then Netflix already ran up, and I missed out on the Netflix. So you got to really pick and choose and think about timing. So I was a little too patient this morning. I don't know why, but I got the UNH, same strategy. This is for next week. I grabbed a UNH April 24th, and it's a 302.50 call. So I paid 76 cents for it, and that's because UNH reports, I think tomorrow or Wednesday or Thursday, I don't know, sometime this week, but pretty much this April 24th lets me cover this earnings and then the week after. So pretty much that's the whole idea. So if you're playing a company with earnings, do not get the week of. That's not what I would do. I don't do it. I'm an option trader. I'm sharing with you what I do, what I've learned, that you can make a lot with that, but you could also lose a lot. But the last thing you want to do is play something for earnings, have it have a big earnings move, and then you don't make money because you didn't have enough time, but you were generally right. You were right it was going to move. You had it out of the money. However, you just ran out of time. So, because again, if it moves and doesn't end up by your strike price by expiration, that contract will expire worthless. And then if you pay a premium on it, even higher chance of expiring worthless. So if it makes like a $10, $20 jump, but you're $40 out the money, you want something with an extra week of time at the very least to hold your value or give you a gain. So that's kind of the logic here. I'm going to end up getting a put on this play. I'm just starting with the calls first, and I only grabbed one of these. So I grabbed one of these at 76 cents. They closed up here at $1.02, and you could see even from yesterday, so despite even UNH was actually, they were up in the morning when we got them. They came down and closed here, but they barely closed up, but those contracts took a pretty big beating. So that was like the anti of earnings. So watch out, because once UNH comes into earnings mode, it's either going to start kicking off or even worse, because UNH had such a big run up. Think about it. We're already in earnings mode. That's why we got a little bit of a discount, but you could see it already popped up from earnings mode last week. So now that's holding up. Think about that JP Morgan play. So that's why we only got one though. Kept it small. It's not too bad. And then the other play I made, I did a Boeing strangle. So this play, I didn't really like it, but the point was it's been 2 weeks. We played Boeing, I think, a little bit last week. Did I do a $20 play? I'm not sure if I did, but ever since that 1,000% one 2 weeks ago, it's been 2 weeks now. So pretty much Boeing hasn't moved. So this play is very, very unique because, again, this one is just more or less playing the logic. They have earnings. Someone said that, why didn't I play the earnings? I'm just playing it for where it's been the last 2 weeks, and then if it does get a pre-earnings week move, kind of like Netflix, will profit off of it. But the fact that Boeing hasn't moved in the last few days, I thought this would be a decent one. So I grabbed the 180 call for 55 cents and then a 110 put for 56 cents. So $100 both ways. This is a strangle, and think about it. It's at 147. I got a 180 call, so I'm like, what? $33 on the high side, and then a 110 put. That's like $37 on the low side. So pretty much I'm saying by the end of the week, we're going to, if Boeing makes a $30 move, we'll break even, most likely make money. If not, we get stuck inside the house and then you lose. So I like that play, but I don't like it because, like I said, I'm trying to be more selective here. I'm trying to keep them smaller, if anything, but that play was, a little less of a thesis. You could stretch the dollar, and this is what you guys got to start considering here. You can make any play you want, but you have to ask yourself, can you stretch the dollar? Can you separate that play or do something similar but a little better? I could have just done the exact same play with earnings, maybe spent a little bit more money, sacrifice the $30 range. That's what I liked about this play, is even though it's a weekly, even though it's $100, $30, surprisingly, I mean, we've seen that it's almost pretty reasonable. This one wasn't too big of a week for them, but when Boeing starts to have these big weeks, $30 is, you want to be closer than not. So that's what justified that in that sense. However, if you could stretch your dollar and take it to earnings or even another catalyst or event, I would do that. So there's that. And then finally, the last place, Netflix, Amazon, NVIDIA, Shopify. So these are some of those companies that could have those big earnings. Pay attention. That's one of the tasks I gave to everybody today on stream. You should all be looking up all the earnings companies and be prepared. So if you guys really want to get good at these strategies, call them out on stream. But pretty much so when you see a company moving, you're like, oh, that earnings is in a week or two. So call it out and share that information. I don't know all of them. I don't keep up to all the date all the time. So that's what I need to start doing, get refreshed on that. So we could all do that and help each other out, but try that. But these are some of the companies I like. Definitely, again, NVIDIA has a later earnings. I think Shopify as well. Netflix and Amazon are closer together, but pretty much these are the companies. This is that wave. Netflix had a huge move today. Amazon made a huge run up. That's that first kind of good step. And this is what you have to ask yourself. Is this day one of 3 or 4 of a multi-day earnings run up, or is this week 1 or 2? But pretty much what I'm saying is that we could wait if we miss out on the first jump. So I missed the Netflix. I'm waiting. I'm not going to pay 1,000% premium. I want to see what happens. Think about those JP Morgans. But the question is, you have to ask yourself, even though we missed the first jump, if we're waiting, are we in day 1 of multiple days or the week 1? If it's going to continue for a long time, then maybe we could justify paying the premium. Otherwise, if the earnings is a little bit more further out, then you could kind of reasonably expect for it to come down. Honestly, think about that NVIDIA play. Remember, we killed NVIDIA on the last one. That's exactly what happened. If you guys remember, NVIDIA shot up, then it got crushed, and then it went up, and then right before earnings, those premiums came down because they were already up so much, and then even after earnings, it took a little bit. So don't forget that. So you guys got a lot of good knowledge in the Colt Experience Bank. But that's pretty much it as far as those companies. As far as everything else, again, watch the banks, watch Netflix, UNH, Amazon, NVIDIA, like we said, Boeing, and then even Apple. They were interesting. Another one, watch Adobe. And like I'm saying, think winners and losers, like I said, from some of these companies. I'm going to watch Adobe. I still have that April 17th play. That thing's a dud. But the fact that they really haven't had too real of a bounce and kind of holding these levels and the fact that they never gave up their 2019 gains, that's telling you something. So watch companies like Adobe, watch Johnson & Johnson and Procter & Gamble. These ones had pretty decent bounces. Again, same thing. They held up most of their strength. These earnings are going to be interesting. I don't know if I'm going to play them. I think I might do condors on them. Same thing even with Coca-Cola. They report, I believe, this week or next week. Then Abivai, I was looking at this for the long term. Their company, they didn't give up the gains as much, but they held up pretty good, and they're at an interesting spot. So I'm just watching them, but keep your eye out there. And even, again, any medical companies and all that stuff, watch for that next wave of this whole earnings dance for medical companies where instead of earnings, it's just drug approvals. But then watch Walmart. Walmart killer. I don't think you guys realize this. I saw it today. I kind of had a crazy reaction, but Walmart at these price levels is crazy. This could be really good to set up for earnings. They could actually kill it, or they might have a big run up to earnings. They might even just run up another 10, 15 bucks from here and then come down to earnings. So they'll have a big run up, report, kind of do bad, and then level off. That's what I'm kind of expecting, but this is huge. So I am going to look at Walmart. I really like them. Same thing even with XLNX. We talked about this one yesterday. Waiting for that opportunity. I'm not too excited on this play just yet, but watch it. Just don't forget about that. Then finally, TLT, they were up, came down. We're still down that 30% on that contract. The GLD, I was only up 20 or 30%. These, I need to see what happens. I mean, I'm waiting. So again, if we have one more update, we'll see. Gold is doing a good trend. You're watching, watch gold in the overall market. However, we got to be careful. I think the gold is going to be hard to flip out of. I want to get out of those, get more time, but I feel like I'll get more premium on a red day, believe it or not. So I don't know. I'm watching that. I'm still hand on the trigger with that one, but that is your watch list, ladies and gentlemen. Make sure you're healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your helmet on. I need you in the game, baby. Do not quit. Use what you got. Some of you just got a glimpse. What did you learn? Take it to the bank, baby. Take the lessons to the bank. Don't forget it. Keep your helmet on. This is the time, baby. If you are positive, your checks are going to be positive. Your plays are going to be positive. If you're negative, well, the same thing will happen. You need to keep going. This is earnings. There's opportunity. You just got to space it out and stay alive. You do not quit. You are never out of the game until you say, I'm out of the game. You're never out of the game if you could throw another 20, baby. So balance and keep yourself alive. The code loves you. I love you. I'm going to see you in the morning. Let's go.